best opportunities. Yeah.
Yeah, that's right. Try to make the best of all worlds. Yeah, right.
So you want to
Yes.
video it? Oh, okay, I see. I thought you were going to.
Oh, okay, sorry.
Yeah. So 1973, went to Melbourne University, did a Bachelor of Commerce degree. I was originally going to do commerce law. I decided to just do economics because I got very interested in that.
Yeah.
So 77, first job was as an economist or an economic research assistant at National Mutual, which is now AXA, a life insurance company.
Right.
Stayed there for 7 years.
Right.
Progressed from being a research assistant through to being economist with the economic research division. So that was more like industry studies, econometrics.
I see.
So it was studying growth patterns for industries, contributions from broader base like agriculture, manufacturing, services, and quaternary, which is services for services sake, rather than services for industry, for example, which we classify as tertiary. So it was big picture, looking at for investments, as well as understanding where growth like demographics and things like that were going.
I see.
So at the end of being at National Mutual, they made me manager of investment research.
Right.
Which was in the investments division. So then I was doing specific company analysis. I had a group of analysts who were looking at companies for the investment profile of National Mutual. So we had several $1 billion under control, and they also gave me a fund to manage which had a couple of $100 million in it. So that was in I guess 1982.
Right.
So then I left there and went to a place called Potter Partners. Potter Partners was a stockbroker.
Yeah.
I think it's Bell Potter now. So, because there's been a lot of reorganising.
Oh yes, yes.
So
Merger.
a lot of the huge stockbroking firms and things in those days were brought out by overseas companies, the Merrill Lynch's and things like that.
I see.
And while I was at Potter Partners, they were bought out partly by SG Warburg, which is a UK merchant banking firm, and then Mercury Asset Management got involved with Potter Partners after that. So I was there. I went in as an assistant or as a portfolio manager, and then after a little while, I think about 6 or so months, they put me in charge of the whole unit trust business there, which they were starting up from scratch.
Wow.
So I stayed there for about 4 years, then moved on from there to Macintosh Asset Management, a new setup for a group called Macintosh Securities, which was just a start-up operation in the fund management business. So this is before superannuation became the huge growth business. But I could see that's where it was going.
Right.
And unit trusts were the things, were main things like equity trusts, cash management trusts, growth trusts. So from there, went to New York and set up my own hedge fund, managing money, and for the first 12 months worked with out of the offices of George Soros, who's a big US fund manager.
Quantum fund, is it?
Yeah.
I see.
I managed some money for Quasar, which is another fund he had. So I worked out of his office, set up an office in Bear Stearns, which no longer exists. It's gone completely.
Yes.
So I had an office on Park Avenue there for, I was in New York for 7 years.
Wow. And
I found that I was continually changing my investment strategy because investment strategies would be profitable for a while, and then people would come in, there'd be a lot of competition in that area, so you had to continually reinvent.
I see.
So one of the areas I got into was looking at refunding or refinancing failing companies, even if they had a good business model.
Yes.
Often the principals would take too much money out, or they would do something that was like vanity projects rather than just sticking to the fundamental businesses. So get involved in funding those basically good businesses, but businesses that needed money basically. But everyone needs money. You can spend it wisely or not wisely. And then from there, got involved in the music business because one of the businesses that wasn't going so well was in Australia. So I ended up investing into business here, starting up my own record label, Wah Wah Music, signing Killing Heidi, which was, I was originally told that one of the major record labels was going to sign them, which they didn't. So I ended up being involved with setting up a record label, releasing Killing Heidi, which was very successful. From there, been in the record business for 14 years, I guess. No, 15 years. And now I run involved in two businesses. 123, which is a booking agency for Australian music, and Keynote Entertainment, which is for booking speakers, the Speakers Bureau, and manage individual artists like Ella Hooper, who was the lead singer from Killing Heidi. So that's in a nutshell the timeline.
Thanks a lot for your sharing. I mean, like, we are curious, what is the factor that makes the great transition from finance to, you know, rock and roll business in a way, which seems totally unrelated on the surface, right?
They are, and I think I got to a stage in the investment business where I was sick of working or being on call 24 hours a day, having issues with people who you were working with. I found staff difficult in some ways in that area, because it was an area where there was a lot of money involved, and I really just wanted a different business model, something that I could enjoy doing. And I'd been in the business for so long, thought it was time for something different. And music is something that I really love, and the opportunity presented itself. I hadn't intended to set up a record label, but that's the way it worked out. So often these things happen as much by chance as anything else.
So will you say you are a contrarian investor? I mean, like, as in signing up, Killing Heidi, you know?
I like a challenge. I like a challenge. So when I first got involved, everyone said you were crazy to try and do it independently, an independent label. And also with Killing Heidi, I was signed up for management, publishing, recording. So the original 360 deal, which is the industry standard now, but everyone said it was a conflict of interest. Whereas I guess with my background, I didn't come through with any preconceived ideas. I hadn't been a musician, I hadn't worked for one of the traditional recording companies or publishing companies, so I just looked at what was the most logical way of putting it together. So that's what happened. I didn't try and get involved in the music production side. There was a person who, you know, I'd leave that to people who are professionals of doing that. So it was really just the business side and more the contractual side.
Right. So you would say, like, the transition will be driven more on passion for the music initially?
Passion for being different, a challenge. As I say, I was told originally that one of the major companies was definitely going to sign Killing Heidi, and they didn't. So it was a question of, like a lot of Australian groups, nothing really happens. There's a lot of talent in Australia, as there is everywhere else, but it's a question of putting together the whole package.
I see.
And with a major not being involved, decided to do it, do the publicity, get involved with a particular record label that was smaller, who had the ability to do the marketing and distribution, because in those days you needed physical distribution. But basically did the videos, did the music recording and everything in-house in Wah Wah Music.
I see. So now the next question is how would you, like, why would people want to choose you, like the artist? You know, what is your competitive advantage over other players in the industry?
It's an interesting question, because one of the things is that the music industry is really predicated on selling artists back their dreams. So there's, I wouldn't say just salesmanship, but a lot of people have the same sort of line. One of my disadvantages is that I tend to be realistic when I talk to artists and say that it's very hard to make it to the top in the music business. And any realistic examination of even the majors would see not so much the stars that they make, but how many people they sign who fail. So if you get majors who are signing a large number of acts that they obviously think are going to be very successful, and then they fail, the question is, why is that the case? With me, I think you have to have a lot of energy going into making something or someone work. It's a business model that a lot of people don't like about selling, but everyone is selling something at some stage.
Exactly.
So if you get the artist, you get everything aligned so that all your interests are the same. I think you've got a better chance than most. Because you were asking before about whether I'm a contrarian investor. You can't be contrary to fact, but you can be contrary to opinion. So part of the key in life and in business is to know what's fact and what's opinion. It seems fairly straightforward, but most people get the two things pretty heavily confused. So you need to have someone who's talented, they need to be able to write their own material or source it, and then they need to be willing to play the game. Because a lot of people say, well, artistic integrity, we can't change. That's true, but you've got to know what your options are. And by being open to different ways of doing things, you don't have to compromise, but you can be mentored to improve your chances of success.
Right. So can I say that these are some of the secrets of your success with Killing Heidi?
Secrets of success. Killing Heidi was a big learning curve because as an outsider, I did rely on other people's expertise to come into it. But the fundamental principles for business, I think, work whether you're in the music business or whether you're in the manufacturing business or the finance business. That is, you've got to really have a product that people want, and then you've got to market it. Whereas a lot of people in the music business think that they're going to get discovered, that marketing is a dirty word, that sales is a dirty word. But as I said before, we're all selling something, and even the managing director of a company has to be selling his or her company.
So you make the artist understand the concept of the ability to adapt to a certain degree on what the market wants.
Not adapt, but see things from a different angle. So that where people are always a product of their education and what they've gone through. So their ideas, when they say this is who I am, it's really who they've grown up to be. And that may be really them, or it may not be really them. Might be all the prejudices that they've accumulated over time. And some of those prejudices might be fact and some might be opinion. And as I was saying before, as an investor, you've got to know the difference between fact and fiction. So a lot of the basis on which people operate isn't really well founded. So and what I find is if you sit down and you discuss with people in any situation, you don't need to be the boss. If you discuss it, the right solution becomes obvious. It's only when people go in with preconceived ideas that they're inflexible that you don't end up with the right decision. So it's not much good going into a negotiation where the other person loses, but it's not as simple as saying win-win. It's something where you go in and there is a right answer.
How easy is it talking to artists? Because most of them think they are very, very original,
Exactly. And again, a lot of music is derivative, so there's not much point in being an artist that's the same as someone else who's already done so well in that musical genre. So what I say to people is to be authentic, to find your own voice and write about what you know. Don't try and be like a British group or an English group or another Australian group. Be yourself. Find your own voice. And that is part of the problem, is that talent is seen as being able to sing, whereas I see that as a gift. The talent is being able to have a voice, be able to emotionally engage other people in what you're doing. and turn it into a business, because one way or another we all have to get our income.
Yeah.
So you might as well get the income from doing something that you love, as opposed to doing something that you don't love, to be able to sing. You know, what I'd love for all the artists I get involved with to make music a career and to get a living from it, not being something that they just do part-time.
Right.
And that's a big distinction.
Oh yes, yeah.
So can I ask, at this stage, how many artists are you managing under your label?
At the moment we've got four artists.
Okay. I see.
So I'm very selective. There are only artists that I think have got all that you need to make. Because as I say, talent is probably around about 20 to 30% of what you need to succeed. You need management, you need the right product, i.e. the music, you need people that are open to work hard. A lot of people think that being a star is about throwing tantrums and getting everything you want. That may be the PR thing, but there's a lot of hard work.
Yeah.
But having said that, it's enjoyable hard work. So we all have to work, so we may as well do enjoyable work.
Yes, that's right.
So is this more of your, like what you just say, doing what you love compared to in finance versus the investment world?
Well, investment, I had a different approach to things. I don't believe in fundamental analysis. I don't believe in technical analysis. What I believe in is statistical analysis, so that you're always looking at the odds of things happening, and you're analysing situations not on the basis of any theory that's in textbooks, but on the basis of, I used to categorise it as flow of funds, where money is coming from. Look from the top down, not look at individual companies, because the individual companies tend to fall out. As I said, I was doing industry studies when I was at National Mutual, so you could see big broad trends over long periods of time, which is what you really need to be aware of as a successful investor. So for example, you're probably better off investing in internet-based stocks than you are investing in automotive stocks. So you can be the best analyst of automotive stocks, but if it's in an area that's fundamentally being propped up by government and has problems with labour relations and things like that, you're probably better off to be underweight that, and you're probably better off to be overweight internet stocks, even though they might not look great on fundamentals.
Yeah.
So, but it's not quite the same as just being after growth stocks. They've got to be growth industries. They've got to be areas where money is going to be flowing into them. So you need to know what investment preferences are going to be of all those people out there buying stocks. So it's a psychological approach which manifests itself through statistical analysis.
Right. So from your investment sort of thinking, you will be more aligned into the flow of capital.
Flow of funds.
Flow of funds, yeah.
So what I would rather do is look at, and it's a classic example at the moment, a lot of people bemoan the fundamentals of the stock market, and they talk about price earnings ratios and averages and things like that. The trouble is that averages are pretty meaningless. It's the trends that are important. And the fact is that if there's a lot of money being generated by quantitative easing, that money has to go somewhere.
So that's why we see stock market rising at this stage.
Yeah, because where else do you put your money? So it's not a question of absolutes. It's like when people again are talking about competitive devaluation of currencies. It's a nonsense to have all currencies devaluing at the same time.
Yeah. So
it's a relative game, so you've got to statistically analyse all of that and work out what the relative attractiveness and balance is, not the absolutes.
Yeah.
If you can see that. Now, having said that, if you're a great stock picker and you can analyse stocks, you'll do very well. And I know people who are stock market based stock pickers who I put my money with, and they do a great job. But it's a different philosophy, and it's one where you'd really need to know all those companies, believe them, and all the rest of it. And the problem is that, as anyone who's done accounting knows, you can hide a lot in accounts as well as reveal a lot.
Yeah.
So, you know, to spend all this time finessing analysis of accounts and doing fundamental analysis, I'm not sure that it's so helpful.
Right, so you're touching on this point that you raised, the flow of funds. So are you familiar with the work of Martin Armstrong?
No, I'm not.
Oh, okay. I mean, like his background. I mean, he is the person who established Princeton economics.
Oh yeah.
Yeah. So he's very active in the 80s, in the early 90s. So he has got a model which is called economic confidence model, which he works up every 8.6 years or so. There's a major turn in his model, and where it will shift the direction of the flow of capital. So
Is it sort of like the long wave theory and all that, right?
yes,
Yeah.
very much.
Is
Cycle.
that Kondratiev and things like that?
Yes,
Kondratiev.
Kondratiev is based on economic cycle. Yeah,
This
actually,
was based on wholesale prices, I think, with Kondratiev.
it's a bit on. I mean, for Martin Armstrong, it's a bit of everything. Like you say. I mean, what you just say very much sounds similar to what he believed in. Like it's a very psychological effect, and we as a human being is part of nature, and because of how energy flows, and so that's why every cycle is 8.6 years as a major cycle, and according to him, that 8.6 years is exactly equals to pi, which is 3.14 times 1,000, which is exactly how many days there are in 8.6 years. So that's how energy moves, you say.
Well, it sounds like a lot of the Fibonacci ratios and things that there used to be Elliott wave back in the day. So there are, and I've got friends and people I know who've employed who've done Elliott wave, Fibonacci counts, and all the rest of it. I look at all those things, but I guess with me, I'm happy to read everything, but I don't believe everything.
Yeah.
It's a bit like the old story of listen to the man who's read one book.
Yeah.
You have to read widely. Most tend to have flaws in them.
Yeah.
When I'm talking about flow of funds, I'm primarily looking at the amount of free liquidity that's in the market, and how much money is flowing to all the participants. So if you know that money is flowing to superannuation funds over a period of time, so this isn't like day to day or week to week, but if you know that money is flowing to superannuation funds, you know that they're investing on the basis of 5, 10, 20-year time horizons. You know that the money's coming in, they have to invest it somewhere. You have an idea of what their investment mandates are.
Yep.
So what you're doing is just consistently working out what their chances are for every new dollar that they get, how much they're going to put into the stock market, how much they're going to put into real estate, how much they're going to put into others. This is all published information, but people don't bother going through it. So you go through it and then you say, well, what's the lowest risk for them to go into? Do they need dividends? Do they not need dividends? Private investors, do they need dividends? Not dividends. That's why you get a lot of the dividend imputation stocks and things moving with private investors now, because interest rates are so low. And I think you end up with a lot of perverse effects. Like people want lower interest rates to stimulate the economy, but what does that do? It means people who rely on income from fixed investments, they have to get out of those fixed interest investments to get into the stock market to get the yield, which increases their risk profile if there's a downturn. But it also means that if they stay in their fixed income investment, then their ability to consume goes down. So you're actually taking spending power out of the economy to help manufacturing. And manufacturing, you've got to decide, are we better off producing something in a factory? Do you want your kid to work in a factory on a factory line? Or would you rather them work in a tertiary or quaternary sector, in an office or creatively, and have that production done somewhere else where it can be done more cost effectively, and people might be moving from an agrarian's environment, which is less healthy than being in a factory where you get better food, more consistent, all the rest of it. So for some people it might be a step up, even though we look at them as sweatshops. That might be better than working in a rice paddy all the time. So we're all constantly talking about sort of economic imperialism, but really what we're trying to do is change people and not understand the process. So I'd rather people have industrialisation where it makes sense,
Yes.
provide that path for growth, preferably not like mercantilism with China where you're just exporting everything, but build up a big middle class, strong working class that are getting paid well,
Yep.
and have your social transformation that way. So don't prop up manufacturing here. Let that go to where it naturally goes to. Have us in the creative areas, and put your money into those areas. Build those up here. So I think that makes a lot more sense. When the government gets involved or other people, it tends to just firewall particular industries and make it difficult for capital to flow to where it should flow.
Touching on that point, we strongly agree with what you said. We do not believe in government intervention is going to be a long-term sustainable sort of a measure.
Well, unfortunately, it is sustainable. It's just not very helpful because often these things have perverse consequences. For example, keeping interest rates low, and all the people who rely on fixed income don't get enough income. So you're doing that to stimulate exports. The exports are of manufacturing. You don't particularly want manufacturing anyway. So you then force retirees further into risk by buying shares rather than having fixed income. That then has a perverse impact on the portfolios that people hold. So there are a lot of unintended consequences. So when people say mindlessly, we need a lower exchange rate or lower interest rates are good, all you tend to do is end up with bubble economies with lower interest rates, and you tend to end up with perverse implications for people's portfolios if they can't earn money from a proper interest rate.
Yeah, we totally agree with your concept there. But,
okay, so all these things are intertwined.
That's right.
A lot of the conventional wisdom that people would argue with you day and night. We've got to have a car industry. Why not produce cars in Thailand? You know, we import our utes and things from Thailand. Thailand can produce them cost effectively.
But the majority of the population still thinks that government has to do something.
To keep jobs here, we should be providing a growth for Thailand and a growth for China. You know, like we should be getting our cars from whoever can provide the lowest cost. And then people say, yeah, but the Germans subsidise their industry. Well, just because someone else makes a mistake doesn't mean that we should do it as well. So I think we should be sourcing it from the lowest cost producers. And governments always tend to muck it up. We had the problem with Japan in the 80s, we were talking about before, where Japan was going to own the world, if you remember. They were buying up all things. We've had Japan flatlining for 20 years.
Exactly.
Yeah, 2 lost decades.
So they're heavily controlled, whether it's officially through the government or through other informal mechanisms, tend to work for a little while, but then they don't work in the longer term. Having said that, Japan produces fabulous things, a fabulous country, but they would be better if they had a more open system, in my opinion.
That's right.
That's right. So, what kind of advice would you give, or what is your outlook for Australia now, like the next few years? Like individually, we try to know as much about investment as possible. I mean, although we came from business school, he majored in finance, but sadly, we don't learn all this in university, right? All these are missing. It's
like when I was at university, it was mainly Keynesian economics. We learnt in economics. Had some fantastic lecturers, so there wasn't a problem with the quality, but perhaps the syllabus could have been more widely spread. I still think it's more important that universities teach you how to think rather than what to think. And I think I mentioned that to you before. A lot of people, it almost becomes like a religious thing. You've got to think this way. Whereas it's a bit like politics. I don't mind if someone disagrees with me as long as they've got a good reason for why they do it. It becomes a bit more tribal. You're just backing your team, it's your footy team or whatever. Rather than, there's some good points with that system and look at this system, So that's the disappointing part of education. It's not really getting people to think for themselves. And that's where true creativity comes from. Original thought. And it's very rare.
I think, like what you say, limiting that creativity in certain extent, it has drastically reduced the entrepreneurship in individual. I'm
afraid you're right. Now, in America, there is a lot more individual thought. And I think that's the source of a lot of creativity there. For all its problems, I lived in the US for 7 years.
Yes.
Very creative. In some ways more brutal, you know, like you've got your minimum wage is probably something more like $7 an hour there. Here it's probably $19 an hour or something. So it's very different.
Yeah.
So it's a more comfortable place to live, Australia, than the United States. But it's also a country that welcomes people who are in at the bottom with absolutely nothing, and then they have a chance to succeed on their merits.
I see.
There isn't the same system in place in the United States as there is in Europe.
All right.
But then, when we look at the really growth industries, as opposed to chemicals and engineering, which we tend to get from Germany, for example, those old industries, when we're looking at the new industries, they're pretty much all based in the United States. And people talk about the decline of production in the US, but it's a long time since I've flown in a Japanese aircraft or whatever. Aircraft are still made in the United States. I know there's Airbus and all the rest of it, but we've still got Google, we've still got Apple, we've still got Microsoft. All the leading companies tend to be in the United States. Now, obviously, there are fabulous drug companies and things in France and all the rest of it around the world, but if you're looking at people who actually succeed in something that's completely new, it's often in the United States.
And the ability to market it to the world population.
Now that's the important thing, because a lot of people like Sinclair in the UK with computers, and I remember back in the days of, what was it, Z80 or something, processors before microcomputer or personal computers, that was all through Europe. The people who actually commercialised it and made it work were the Americans.
Yep.
And marketing is always underrated. It's
Yeah.
one thing to have the thought, you've got to get it financed, you've got to get it produced, you've got to get it marketed.
I guess that with that concept, it works very well in your music industry because, right? Because you all got the fundamental concept right. The creativity, yes, is important, but plus the most important thing is to able to market it to the population.
Yeah.
Absolutely,
commercialization. Commercialization, exactly. That's how you put it.
And like to really be at the forefront of an industry, you need to be able to commercialise the product. It's one thing to think up the idea, to get the patents if you're in that type of business, produce the music, it's another thing to get it out there. Because I can tell you, in my opinion, the best artists, whatever that means, aren't always the most successful artists.
I mean, like we have the same
idea.
I mean, like,
in fact, we had a conversation early this morning.
It doesn't necessarily mean the most successful or most talented in the musical technique or things like that, right? The most successful artist in a way. It's about the marketability.
Well, in actual fact, I find that people who are the most technically capable have probably gone to singing schools. They've learned how to play things perfectly according to someone else's standard. Whereas it's a bit like people's voices. Mine's terrible, but people like the uniqueness of a singer rather than the fact that it's just a great voice that sounds like other great voices.
Yeah, I mean, it's surprising. Ken and I have this conversation like 3 weeks ago.
He's a great singer?
No, I'm not. Yeah, we're talking about a band,
like those people who are really good at playing piano, like they go to piano school for formal training at the age of 3 and all that. You don't see them like being the most successful original band or something like that. Like on the contrary side, most of these successful musicians, you don't see they go for formal training in the early age. So we were thinking like the more early you've been trained on something, you actually be molded into a box to follow the rules rather than to have that creativity as originality. And
it's originality that people want.
Exactly.
It's something that's, look, in the music business, what I say to people is that they tell me it's about talent, it's about the songs. I think the only real sin is being boring. And that's, if you think about it, anything is, and with some of the acts that we have, if people say, I hate them, I say, that's great. I'd rather have an act that 20% of people love and 80% hate than 90% say, oh yeah, they're good. Because there's a lot of good. There's a lot of mediocre, there's a lot of very good. There's very little that's great. And people's definition of great is pretty quirky. It can vary a bit. So you've got to come up with something that's unique and that inspires people that they really want to listen to. And then market it. And that's why America, I don't think they have any more talented people than Australia in terms of percentages or whatever. Why are they so good with the Katy Perrys and things, whether you like their music or not, is that they're great at getting someone who has something unique and marketing it and putting it together.
Exactly.
A lot of people think that's manufactured, but I'm not so sure. Everything we do is manufactured to a certain extent.
Yes.
You have to have the producer, you have to have a mixer,
Yeah.
you have to have the
Exactly.
managers. Just a question of where you have the cut-off points on different things.
But like you just put it perfectly, it's like a lot of people associate the word marketing as a dirty word. Is it? Yeah. But actually, it's a great skill that everyone should have. I mean, like whether you are in business or you're in employment, like you just say, everyone is actually selling something.
So the same thing with advertising. Advertising is about getting your interest, and it's about not being boring. The best ads are not boring, and they provoke a response.
Oh yeah,
It might be positive or negative, but it provokes a response. A response means you have to think about it. Now, thinking about it means that you'll evaluate that product. If it's boring, no one's interested.
Exactly.
So, being a advertising person or a marketing person is incredibly creative, and it's underrated by people.
Yeah,
in my opinion.
And I guess like 1 or 2 weeks ago they have this video clip that just went viral where it's a marketing clip for Volvo trucks. Have you seen it?
No, I haven't seen it.
What they did, I mean, like for the first 4 days after the release, it hits like 30 million views.
Oh wow!
So it's basically the star of the. It's pretty ordinary clip, but it's totally amazing. The star in the clip is only one person, it's Van Damme.
Ah,
Yeah.
Jean-Claude.
Jean-Claude Van Damme.
Damme.
So what he did was, he was actually, the shot starts from his face. He was saying that he's been into bumpy road, and then he's been all those thick and thin that along that line that makes what he is today. And then the shot just zoom out, and then he was like standing on 2 Volvo trucks on the mirror. And then it was reversing, and then the Volvo trucks reverse out outwardly, and then
had
it
a
did a
split.
split. So it was to demonstrate how fine the stability of Volvo steering is.
Right.
Yeah, it's totally amazing. So,
Well, you see, it's hard to come up with an original idea. It's like people tell me pop songs or pop music is so banal or so easy. I say to people, write me a great nursery rhyme now. You can't end up with something, you know, you come up with Twinkle Twinkle Little Star
oh yeah.
or something like that if it's so easy. Let alone go from a nursery rhyme, go through to a great pop song. People can't write them.
Yeah.
And people say, oh, this is terrible music. It might not be my cup of tea, I'll have to say that, but I respect it.
Yes.
Because if you write a pop song that resonates with people,
Exactly.
it stays around forever. People think it's easy. It is harder than writing some blues thing that's been written 100 times before, or country song, the same themes. The people don't resonate with.
Like those Christmas songs that we play every year.
Yeah, they last
Think
forever.
about the royalties again.
That would make money.
Yeah, money.
But you see, again, a lot of people say, oh, marketing, it's all just about money and we're not into money. And everyone is into money.
Yes.
Everyone needs money to pay the gas bill,
Exactly.
light bill and all that.
Consciously or subconsciously.
Subconsciously.
Yeah.
And even then, with some people, they say that they're not into it for money. I say, well, you're into it for the things that buys, though, aren't you? Oh, no. Okay, we'll cut out money and buying these things. It's hard to do. And the big thing that I say to artists is money isn't something that you should just want for its sake, but it gives you choices.
Yes.
It gives you independence. If you don't have money, you don't have choices.
Exactly.
You're pretty much locked in. If you're on the dole or something like that, you can't go anywhere, you can't do anything. You
Yes.
end up with a different quality of life to having money so that you can choose to do what you want to do. with your
Totally
life.
agree. It
So
doesn't
it's
mean
about choice.
yes.
Money gives you choice, lack of money gives you far
choice.
fewer choices.
Yeah. And money doesn't equate to materialism if you have money, but if you still can live a very simple life if you choose to.
If you you can have $1 million, $10 million in the bank. $1 million doesn't mean much these days. $10 million in the bank. If you want to go and live as a hippie, go and do it.
Yes.
But you've got that choice. But if you end up, as a number of people I know from the 70s and 80s ended up on communes, you end up with nothing, then you've got no choice. You have to
yeah,
you know, grow your own
then.
food. You have to do all of those things because there is no other choice. Now that's fine if you love it, but if you change your mind, bad luck.
That's right.
Whereas if you've got money in the bank, change your mind, you can do it.
Yeah.
I think it's a fundamentally different way of thinking about things. And I think it's wrong to overemphasize money, but it's important to have a career, to work, and to have something that does provide you with choices, independence.
Yeah, which comes back to the
Comes back to money,
importance
comes back
of
to planning,
marketing. Yeah.
comes back to marketing.
Yeah.
For kids, it comes back to the fact that it is worthwhile finishing school, it's worthwhile getting a trade or a profession. Perhaps we haven't spent enough emphasis on the value of trades, because that's important as well.
Yes.
Not everyone's should be at university. Trades
Exactly.
are just as important, they're
Yeah.
just different.
Yes.
And that's one of the things I dislike is the hierarchy of things. Like,
In a society, how they view, like, you know, if you are sitting in an ivory tower in a big corporation, that is a good job, right? If you are working on trades, you'll be, I mean, like, you know, that sort of social status is lower, that type of thing.
if you want to be a woodworker, be a woodworker. If you want to be in management, be in management. Have that choice and do it. It's the same thing as people say, well, you make more money being this or that. I think successful artists make more money than probably pretty much anyone else, and I don't think they're necessarily socially more important or productive than doctors. So would we have put doctors below Lady Gaga? Probably not. But, so money isn't the arbiter. It's a question of what you want to do.
Yeah.
If you want to be a doctor, be a doctor. If you want to be a woodworker, be a woodworker. But I think we should facilitate that, and that there are a lot of social constructs that say to people, this is a good job and this is a bad job.
Yeah. So, yeah, back to your entrepreneurship. So, what would you advise young people, like just came up from...
Stay at school,
Yeah.
go to university, get a degree, because as much as anything you learn skills, and it's an endurance test. It means that if you can graduate, at least you've stayed at school and you've persevered with something.
Yes, it's more
And
like...
I think it's a matter of...
Yeah. Sorry, it's more like going through the discipline.
Discipline is
the
important.
routine, yeah.
And it's very easy when you're younger to say, stuff the system, I'll just do what I want to do. Again, it's a recipe for reducing your options, your choices. The more work you do when you're younger, the more choices, the better your life will be down the track. So it's a bit like delayed gratification to that extent. You're saying, I'll give up a couple of years now to go to uni to get that, but that will make my life better for the next 40 years or whatever.
Yeah.
And I think our working lives are going to get longer probably,
Yes.
not shorter.
Yeah.
So it's a question of realising the implications of all your decisions. And I think that is one failure of the education system, that it doesn't inspire children to want to learn. It sort of indulges, enables people, and a lot fall through the cracks.
Yeah.
Those who succeed would have succeeded pretty much anyway, but it's not inspiring people. And we are turning out people who are learning stuff instead of learning to think.
Oh, yeah. How true is that? That's right.
Yep. Right. Can you? Yeah. Two more questions.
Sure.
All right. Some of the books that we should look up to read, right? To learn about the economy. Would you recommend just offhand, or some of the writers or people that we can follow?
Look, I've got a library full of books.
Yes.
But again, the trouble is you need to read a lot of books. There isn't one book that I think enables, because most books have a germ of truth.
Yes.
Or even the bad books tell you what you don't like. It's like everyone's an example. It's just that some people are good examples and some people are bad examples.
Yes.
So, look, I guess when I was younger, one of the things that I read, which I found quite shocking, was Free to Choose by Milton Friedman. Because it was so different from the orthodoxy, and it would never be taught at university. And it was about monetarism, which I don't believe in, but it's about a monetary history of the United States, which he did with Anna Schwartz as well.
Free to choose.
But it was just such a different way of looking at things.
Yes.
So I would read him, and then I'd also read John Kennedy's Galbraith,
Yeah.
which is the New Industrial State, I think it was. This is all in the 70s.
Yeah.
That'd be totally different.
Affluent Society, the book he wrote, right?
The Affluent Society as
Yeah,
well.
yeah.
But he had this thing, New Industrial State.
Industrial State.
So that contrasted with Free to Choose and A Monetary History of the United States. So it wasn't that one book was good, but it was the fact that you could see, wow, these people are looking at things totally differently. And is that politics? Is that reality? So you need to read very widely. I'll have a look for some books to see what's there. But I've read all the books on technical analysis. So I've done, Dodd's whatever on fundamental analysis. So I've done the Securities Institute courses. But I don't think any of them are the answer. Again, it's my philosophy that you read everything and sort of be skeptical of everything.
Yes.
So I don't think you want to be left wing. I don't think you want to be right wing. I think you want to be centre. I think you want to read it all and see.
Critical, right?
And be critical. Yeah, just be yourself.
Very much like what Jim Rogers has mentioned, right?
Oh, is that right? Yeah, just read widely.
Yeah, that's right.
And just don't get too excited about any one author.
Yeah.
Yes.
Exactly how Jimmy Rogers put it.
He said, don't even listen to me, right?
Well, listen to me and then go away and try and prove me wrong.
Yes, that's right.
And that's why I started getting involved in statistical analysis a lot more, because statistics are a fact. Like, there are all the problems in data collection and all the rest of it, but get away from that. It's something where you can get back to something that's solid. Whereas everything else, whether it's Marx's labour theory of value, how do you explain interest rate, which creates time value of money and all sorts of things, they all have feet of clay. And a lot of people choose to believe them, even though they know they're wrong.
Yes.
Do you know what I mean? But you've got to know that they're wrong, because if you read the supporters, it looks like it's right.
Yeah, that's true.
You see what I mean?
Yes.
But one of the books that I read very early on at university, and I had Professor Blaney as my History of Economic Thoughts lecturer, was Adam Smith, The Wealth of Nations, which is a bit hard for people to read, and it's a very old book, obviously, but that is a fantastic book about how the capitalist system works.
That was written in 1776, right?
Yeah.
Probably, I forget the exact.
Yeah.
And there was John Stuart Mill. If you read a lot of those classical or classic economists, again, heavy going, but the truth of how it works hasn't really changed. I don't know whether you've read though, or you know.
No, I mean, before I let you go, I have to ask you this, since you are from the Wall Street.
Yes.
Okay.
Yes.
I need to
Me
ask
too,
you this
okay.
for my personal curiosity. How would you see precious metal in this next decade? Is it going to be a good investment? It's going to be a good hedge? How do you see it?
Okay, gold is one of those things that is huge in Asia in terms of a hedge. I think they've just put restrictions in India on gold, import tax and things like that. I tend to be neutral on gold, just from the viewpoint that there's so much money around. I think we are running the risk of inflation down the track. I think we are running the risk of just inflating. The trouble is that we don't know how long that's going to keep going. If they keep this quantitative easing going, and there's no sign of tapering yet, we've got this new woman, Janet Yellen, on board, they can just keep pumping the money out and expanding balance sheets for banks. And I think that's bad news for the economy.
Well, eventually it will come to the war, but is that from here to that war, it may still be a long way to go.
Perhaps
Nobody knows.
Perhaps you need a survival farm out in the back with plenty of canned food. Look, if you're asking me about gold, I see gold as part of a portfolio. So I'd have some gold, I'd have some shares, I'd have some fixed income. I don't believe in just having one particular view or one particular position. However, it's hard to own bonds and things in the current market. And the share market is pretty inflated. Gold has been interesting. It had a big run up. It's come down a long way. I wouldn't particularly be in gold at the moment. I don't think it's particularly the right investment. At some stage, yes.
Mm.
The trouble is that, say, all the people who have money at the moment have no predilection to buy gold. So it gets back to my flow of funds.
Okay.
What they're doing is buying assets that provide income, and gold doesn't provide any income.
Yeah.
I know in Asia it's seen as a store of wealth,
Yep.
and there'll be a buying of it there. And I've had a lot of Chinese friends, and I had a good friend at National Mutual who was a fund manager who loved gold.
Yeah.
It hasn't. Yeah, what can I say? I wouldn't invest in it personally.
Yeah.
Yes.
Okay.
Thank you.
No problem.
It'll probably
Just wanted to know that.
it'll probably boom straight away.
Mm.
But
nobody knows. Yeah.
yeah, no.
Yeah.
I'll talk to you about it later.
Thank you so much.
Okay.
Thank you so much.
Thanks, Ken.
I appreciate that.
Thank you so much for your time.
Very good.
Appreciate it.
Yeah.
Thanks.
Thanks a lot. Yeah.